Hey guys, welcome. So today I wanted to make this stream about something that I was losing money to for a while, and I finally realized it. I mean, not crack the code, but it's basically something that you can easily avoid, and it's something that ICT 2022, like the mentorship or the market structure shift pullback entry. This is all about like literally just telling you to entry off the pullback and then manipulation distribution, right? This does not work. Okay, it does work, but there's an exception to this. Okay, for example, I need to give you guys full context. For example, right here, what do you see? Right over here. Now, first of all, okay, if I just like zoom in on this, give me a sec. So over here, let me get a snapshot of this so I can show you guys. All right, so over here, let's say this was a so let's say over here, let's say this fair value gap, right? This inverse fair value gap. Now, most of you guys, okay, let's say this is the 15-minute time frame, because it is, okay. This is the 15-minute time frame. Not that I'm assuming either. So this is the 15-minute, as you can see, and 15 liquidity. Okay. So again, this example is from Casper SMC, but I'm going to show you guys the theory. Okay. 15-minute. Okay. 15-minute. So this is what you guys see here. But obviously, like when you see this, right, the first thing that you're going to do, like on the 1 minute, right, on this specific candle, when you see this on the 1 minute, right, one minute, the first thing that you're going to do is probably like, I'm so bad at drawing in like upside down, but like something like this, isn't it? Like you would pull back entry, you would see this inter-term low being broken over here, like market structure shift in other words, and you would like see the pullback, you would entry here, and then contrary to your expectations, you would have like your stop loss here, like SL, and then contrary to your expectations, like now you would expect price to low key like draw towards like the 15-minute drop in liquidity, right? Whether it's to this swing low, whatever it is, right? You would like expect it to just draw, like. But contrary to your expectation, look at what happened. It ran directly to your stop loss. Now what about the ICT 2022 mentorship, right? ICT 2022 mentorship tells you, hey, if this pattern happens, right, please trade, right? Please entry. But what happens is that you go and hit your stop loss all the way, right? And then right after, price moves. And why does this happen? Now this is called inducement. If you guys see over here, there's a lot of trendline liquidity building up over here, right? And this is the real inducement. For example, if we'll try to induce as many people as possible. Now over here, as you guys can see, this is the point where price really started moving. And it moved drastically towards the sell side liquidity, 15-minute liquidity over here. Now this is pretty simple because all you need to wait for is a clear stop hunt. For example, now once this 15-minute fake out happens, right? Let me just zoom in so it's easier. So once this 15-minute fake out happens, something like this. I'm so shit at drawing, but basically the market structure shift. Okay, so you see this inter-term low. Let me just like draw this so that makes more sense. Inter-term low, broken fair value gap pullback, manipulation, displacement, right? Distribution, right? So basically over here, as you guys can see, it runs. Okay, so let's say this is your stop loss. I'm just gonna draw this as SL. Okay, sorry, give me a second if you guys are on the chat. Okay, so it's gonna push you all the way towards stop loss and then collect as much liquidity, take you, and then gold. Okay, so that's exactly what you guys see over here in this example. Right here, see? It pushes you all the way to your stop loss. See? All the way to your stop loss. Goes here. Now over here, this is where you see the real inducement. Okay, I mean real market structure shift. And then we have a displacement towards the sell side liquidity over here, as you can see. Sell side liquidity, SSL. Now this is where you TP. See? Simple, isn't it? So again, this now sometimes it's not, I'm not saying fully this would like happen all the time, but from my experience, right? My experience in the markets, this happens more times than you expect. Now sometimes yes, price does like do the like 2022 ICT model where it just comes back to the fair value gap and just goes, right? Like no like second stop hunt. That does happen. I'm not saying that does not happen because prices, everything in trading is about probabilities. So yeah, basically what I want to show you guys here is that this will happen within this. Okay, I'm sorry about the dogs, but over here, this is what takes the price down to sell side liquidity, SSL. Okay, so I'm sorry about the dogs, guys. I don't know why they're whining, but yeah, so that's pretty much what I want to show you guys. And this is where the manipulation really happens, and this is the distribution leg. Okay, it's as simple as this. Now you can TP here, or you can even TP on the 15 minutes sell side liquidity draw, which gives you like, even if you put your stop loss here after this like fair value gap manipulation, like you put your stop loss here, you put your TP here, you get like a pretty good risk to reward just based off like the thing. One more tip, right? One more tip, let's say for example, like over here, right? Over here, like let's say over here. Now, obviously not in like, okay, let's say you're on the 15-minute time frame. Okay, so 15-minute time frame, right? 15-minute time frame. Now, what you want to do is like over here, right? This is your TP. If you would like taking the trade from like this, like again, one more thing I forgot to mention, right? If you are taking this trade from here, okay, obviously don't put the stop loss like an idiot over here. Okay, first of all, stop loss needs to go at the bottom of the fair value gap. Now, by bottom, the first thing that I have to mention clearly is the fact that you shouldn't put the stop loss at the bottom of the body. Okay, you should put it at the bottom of the wick if there is a wick. If there's no wick, then that's fine, just put it at the body. Okay, so if there is a wick, put it at the bottom of this wick. Okay, because I've had points where prices induces much of the body, like the full body, and then just gone because the wick is there, right? So because here's the thing, right? The concept of the wick, okay, this is this is very confusing because it's upside down. But basically, like the concept of the wick is that it's an order block, okay? It's a demand level order block, or supply level in this case, okay? It's a supply level order block. So basically what happens is there's an order block, and over here in this order block, it balances price and then goes towards the next straw, okay? So that's basically the same shit like inversed over here because this is bearish, right? So what I wanted to show you guys over here is the fact that this is where you have the stop loss. Okay, so this is where you have the stop loss at the top of the fair value gap, or bottom of the fair value gap, in other words, because this is flipped around. Okay, so yeah, what I want to show you guys is that stop loss over here, but that is if you are drawing towards this draw. But if your expectation is to draw towards this draw, then your stop loss needs to be here. Okay, so then that way it collects liquidity and goes all the way to your stop loss. It's simple as that. Now, one more thing that I have to mark down over here. Let me just clear the rest of the chart. Why can't I clear the rest of the chart? I don't know why I can't clear the rest of the chart. But anyways, over here, right? Now, let's say for example, your TP was over here. Obviously, in that case, you won't like you won't have your stop loss like over here, right? You would have your stop loss here because you would get like pretty good risk to reward. I don't think this is like that good RR, to be honest, unless you're taking like this whole move down towards sell side liquidity over here. But here's the thing that I have to make clear. Okay, now over here, what you guys don't realize is the fact that sorry, my dogs are like barking. But okay. So basically what you guys don't realize is over here on this 1 minute, you will see, so okay, this comes directly from Casper SMC himself. So you will see at any draw liquidity, there is a sort of like, let's say for example, if this, like let's say the candle before the final candle that goes towards TP, okay, assume this is the TP line, okay, this is the finish line, okay, so this is the finish line, okay, so now at this point this is basically your finish line. If it does not draw back, and if it does not pull back further than the previous candle before the one that hit TP, there's a high likelihood, especially in this type of movement, because you have a 15-minute huge bearish displacement. But at that point in time, it won't be like that obvious, right? It's a huge displacement. So first of all, what you gotta expect is a price to like low key like pull back to this like candle before. If it does not pull back or pulls back and then manipulates and goes lower, that means the price is funding to draw towards the next draw on liquidity, whatever the next draw on liquidity is, whether it's like these lows or this low, you get me, right? So yeah, basically that's the idea that I wanted to share with you guys. This is something that I was losing money for a long time for. Okay, so this is something that I want you guys to be aware of, because a stop hunt happens all the time. It's not just about market structure shift TP. It's not just like that. Okay, it's not straightforward. Again, don't be like situated on this specific concept either, because I want you guys to sort of approach the market with like different scenarios, right? Because like the market always presents itself as like different outcomes, different scenarios every single day. So you don't want to like wait for a pattern to form and then just like be like, oh hey, this is just the pattern that I was looking for, and then just like, it's not about studying a pattern and then just like thinking, oh, then let me just do this. And if you trade support and resistance, I'm sorry, you're just cooked. Okay, if you trade support and resistance trendline liquidity, you're just cooked. Okay, so again, in this scenario, however, like you see over here, like let's say this was your trend line, and you see this like this was your resistance line, right? And this is your stop loss line. Obviously, what happens next is you just get manipulated by smart money, and then the next thing that happens with smart money is the fact that, okay, even in like this simple scenario, you get manipulated by smart money, right? Manipulation. But then, like, because you breakout trading, right? But then over here, you get manipulated by smart money either way, even by inducement traders, okay? So again, be aware. And yeah, that's pretty much what I want to show you guys. This is a quick stream, and yeah, that's pretty much it, guys. I think I want to share something else. Yeah, so I'll show you guys a few examples. So this applies regardless of time frame. So because time is fractal, right? So it applies regardless of time frame. And let me show you guys another example. So as you guys can see, this example, if I can load this. Okay, so over here you see this is internal range liquidity. So now what we know about price is the fact that it moves from internal range or PD arrays or fair value gaps, specific fair value gaps, order blocks, or rejection blocks, all those, right? Swing highs, swing lows. But okay, again, fair value gaps are what identifies as IRL. Okay, and ERL is basically swing highs and swing lows, buy side liquidity and sell side liquidity. Okay, short-term highs on higher time frames, or inter-term highs on lower time frame. Okay, so something like this, something like this, something like this, and all these highs that are made over here, these are all basically inter-term highs, inter-term highs on the low time frame. Okay, which is a short-term high on something like the 4-hour. Okay, simple as that. So over here, as you guys can see, this is a clear example that of what I was going to show you guys. See over here, like this like CISD or market structure shift, or whatever you want to call it, right? So you have this market structure shift, right? Pullback, entry, manipulation, distribution, like right after. Now this, right? This is wrong, because you see what happened right after this smart money trap. This is a stop hunt. Now the thing about a stop hunt is the fact that it creates a strong low, okay, or strong low, or if you flip this around, it's a strong high. Okay, so the fact about strong lows and strong highs is that after the market structure shift pullback entry, like manipulation here, and you get the point. PD array, fair value gap. My drawing is horrible. You see like something like this. Okay, over like after the stop hunt is done. Okay, so basically I'm talking about like over here. This is what happens at this specific spot. Okay, so some people call it a CISD. So on the 1 minute, this is what happens. Okay, 1 minute. Okay, so basically what I want to show you guys is like when this happens, because this creates a strong low. Okay, this creates a strong low because the stop hunt is done. Okay, stop hunt is done. It creates a strong low, right? Because a lot of inducement has happened from the SMTs, breakout trading, smart money traders, all of them, right? So now it has a lot of liquidity to really move the market. Now over here is where you want a TP, BSL. Okay, sorry, I'm so shit at drawing, but yeah, that's pretty much what I want to show you guys. Again, don't take this as it is. I want you guys to go and practice with your backtesting. Obviously you can backtest, you have a brain. And over here, as you can see, 4-hour, again, 4-hour inter-range liquidity. Like I said, time is fractal, right? So everything that happens on a higher time frame in a smaller frame happens on a low time frame in a higher frame. It's the same concept whether you're trading 4-hour and 15 minute or 15 minute or 1 minute. It doesn't matter, right? It's up to you. But again, this stream is not really about time frame alignment. So whatever time frame you guys use, it's up to you, right? What time frames you guys use is not my not what I'm here to discuss today. Okay, what I personally use is 4-hour for the bias, and 15 minutes for the PD arrays, and 1 minute for the entry. Okay, simple as that. So I draw towards I basically entry on 1 minute and then take it towards 15-minute draws. Okay, simple as that. So first of all, this golden fib, okay, golden fib zone. Now this is applicable because I have a personal example over here. So let me show you guys something. So let me show you guys the example of my personal golden zone. Golden zone is basically somewhere between 0.68 or 710. Okay, on the fib. Okay, so you draw the fib from swing high, swing low. I'm pretty sure that's simple as fuck, right? So let me show you guys the specific example, because I want to show you guys an example that I had from a trade. And let me try to like I can't find it right now. There's way too many notes, bro. Okay, again, this is what I'm talking about. Okay, again, this is about the strong high made over here, because there's a lot of inducement happening over here. There could be another stop hunt on the 1 minute, and that's how the move is really done towards the sell-side withdrawal. That's something that's really important for anyone to understand. Again, one more thing that I wanted to tell you guys. This is pre-sauce, by the way. Always think of like what the overall narrative is, what side of the curve. If you're on, like, let's say, okay, so I wanted to like make this very clear to you guys as well. So this is something that I also learned very, very well. Not that I like learn very well. I'm fumbling on my words. I'm like too excited to present to you guys what this is. So first of all, what I want to show you guys is in every like higher time frame, okay, swing structure, okay, high HTF, okay, high time frame. Let's say like something like the 4-hour. So you can see something like this, right? So let's say like what do you call it? Swing structure, substructure, swing structure, substructure, swing structure, substructure. So this is basically correct, impulsive, corrective, impulsive, corrective, impulsive, impulsive, corrective, impulsive, corrective, impulsive, corrective. So it basically just balances, right? So it's simple as that. But what I want to show you guys is like over here. Now in this, like let's say like this is the 4 hour, right? But then if you zoom into something like the 15-minute, you will see a market maker buy model over here, like right here, right? You will see the stop on all this. This is so pixelated, bro. Like over here in this singular leg of price action right here, like let's say the price was coming from here and it just balances and go right in this singular leg of price action. This right here, this substructure on the 4 hour swing structure is a huge market maker buy model. So this market maker buy model itself is enough for you to capitalize on. So yeah, that's pretty much what I want to show you guys. Now take this theory into head. This is something that helped me a lot because market maker buy models and sell models just don't happen. Also, one more thing, I want you guys to pay attention to all the like rejections. For example, over here, as you guys can see, right now over here, this right, you want to make sure whatever it is, like if there's no, the third candle doesn't have displacement, that means there's a likelihood that this is basically, you see over here, this is a manipulation wick. That means it's basically, let me just like try to show you guys in detail. It's a manipulation wick. A manipulation wick is just basically a liquidity sweep. So over here, if I just like zoom in over to this, you will see something like this, right? Drop and then go higher, or even if it keeps dropping, so this is just a manipulation wick, right? So it just goes like this, accumulates, manipulates, and then it just distributes. So this is what I want you guys to pay attention to. Now, contrary to this, if you saw something like a full body candle, imagine this is like a full body candle, that means the displacement is indicating that the price is going higher, right? It won't pull back. Maybe it will pull back slightly, but it goes higher. Again, this is a rejection wick, okay? In any context, if you guys see a rejection wick, that is a manipulation. Whether it is a fair value gap manipulation over here, I mean, just imagine this like dropped here. Okay, there is some sort of like what's happening here in this like inside these candles. Okay, on a lower time frame, is that you see something like this, and then like price drops, manipulates, and then just goes higher, maybe even goes further lower, right? So that's what happens on a higher time frame like this. On the lower time frame, this what I drew here is what happens. This is so messy. But yeah, that's what I want to show you guys. And apart from that, we also have one more thing. So again, entry from discount. Okay, entry from discount, this is very important. Now it doesn't matter if you pay attention to 0.68 or 0.710, the golden zones, right? What matters is that if you see a price action, like let's say current dealing range, if you're at a premium, do not fucking entry. Okay, there's times where I saw fair value gaps like this and I try to capitalize, like let's say on the 1 minute, right? Because I scalp, right? Okay, so let's say like over here, like what I would do is like, this is something that I lost money to, by the way. Over here in this leg of price action, now because I know this is a swing high, swing low, right? Swing low, swing high. Okay, so over here in this move, right? Because I know prices pull back here and then go higher, and that like that's enough to like capitalize even on like the 1 minute, right? But then what I don't realize is like there's a high likelihood of getting liquidated. Now this didn't really stick with me. Like obviously I knew the concept for a while, but like it didn't really stick with me until I had the experience. Now over here, like what happens is like contrary to now what you would expect on, like let's say this is the 15-minute, okay, this is on the 1 minute. What you would expect price to do is just come here, manipulate, and then go higher, and then induce this and then go lower, right? Don't depend on this premium zone whatsoever. If you are above 0.5, do not entry back. Okay, wait for a discount. It's not worth it. Okay, there's so many times that I've gotten liquidated entering at premium. Okay, so many fucking times. Okay, this is something that I want to show you guys. Again, I'm sharing all this for you guys for completely free, so please do not take this as it is, and please go back test this. All right, just simply go back test this. Okay, because you will see in the market and come back and tell me how this was accurate. So over here, as you guys can see, this is the manipulation, and over here, see, same thing happens. There's a second round of stop hunt. See, it just like pulls, it just fakes out, and then it has a stop hunt, real stop hunt, and then it goes. See, you see that? It happens every time, every single time. More times than not. Okay, 2022 model, that's why you guys get like your stop hunted. Okay, stop hunted, as in you get triggered, your stop losses get triggered and you lose money. Okay, so that's why you guys lose money, because you get stop hunted, because you depend on the ICT 2022 model, which doesn't work itself, right? It does work sometimes, like alone by itself, right? When like inducement doesn't happen, but there's a high likelihood that you're going to get liquidated. That's something that I want to make really clear. Again, if you're trading breakout trading, please just start studying SMCs. Okay, equalize, this is a liquidity. Again, don't involve in this kind of scenario either, because this is a huge resistance zone, right? For example, there's a lot of transactions happening on either side of the thing, so the first thing you want to do is involve. So the first thing, like over here, like obviously people know there's a lot of equalize, right? This is something that took me a while to like understand as well. I want to simplify this concept for you guys. Now over here, right, like what happens really is the fact that now over here when equal highs or equal lows are presented, or even like relatively equal highs, what happens here is there's a lot of like people like smart money traders, okay, breakout traders are going to wait for like price to like break out here and then like buy from here, right? And then like smart money traders will like wait for the manipulation, the ICT 2022 model, and then just take it towards the sell side equation, right? Contrary to both of their expectations, because this is the whole concept of inducement, right? Inducement happens because like smart money or institutions or hedge funds and not like, you know, smart banks and, you know, people who move the market, okay, they know that you're going to entry or depend on your ICT 2022 model once you see the manipulation here. All the breakout traders are just going to be hit as entering to fucking go to the moon, right? That's the but right here, what happens is because they know you're going to do this, they push price to both of you guys' stop losses. First to this guy's stop loss, so that like first to like the breakout trader stop loss, so that way like smart money trader things like they basically got caught like the perfect move, and then the smart money trader stop loss because it needs liquidity. Stop punting, okay, as many stop losses, and then afterwards it has the real change in state of delivery or market structure shift. That's it. I hope you guys will learn, and I want you guys to backtest this in the real markets. Okay, simple as that. Again, see the market, the high time frame, swing structure, and substructure. Substructure presents itself and has market maker models within them, whether it's in a bearish context. If it's a bearish context, you will have market maker buy models. If it's a bullish context, you will have market maker sell models. Okay, so basically in a substructure, you know. So again, basically that's what I wanted to show you guys, and pay attention to rejection wicks. Rejection wicks are always manipulations. Okay, manipulations is basically accumulation, manipulation, distribution. If you guys don't know what that is, let me just draw it for you. So accumulation is just basically an accumulating range. It doesn't necessarily need to be like a equal highs equal low situation. It can be anything like this. It doesn't matter. But then you will see a sudden manipulation, like a liquidity sweep at this range, okay, something like this, and then a distribution, like distributions where like price really goes towards whatever the draw liquidity is. So that's what I wanted to show you guys, because this is very important. Okay, these rejection wicks. Now over here, this is another example of what over here. See, this is a stop punt, creating a strong low to displace. See, it just goes high displacement, just goes like three candles later, it just goes and hits TP. This was the BSL draw, by the way, like over here, right? So again, pay attention to strong lows and the market structure shift, and just depend on the 2022 model after you see the stop punt is over, right? That creates a strong low at a specific PD area. Okay, so that's what I want to show you guys, and yeah, I hope you guys will learn from this, and I hope I can find more mistakes in my trading. Obviously, like I'm still improving as well, and I hope to find more mistakes in my trading, and I will update you guys with each of the mistakes, and I hope we can all like learn, you know what I'm saying? So yeah, that's pretty much it, guys. I hope you guys will enjoy this. Please do not depend on patterns like these. Okay, this is just basically breakout trading. In other words, do not depend on pattern trading. Okay, so that's pretty much it, guys. Hope you guys enjoyed. I'll get back to you guys about new week opening gaps and new day opening gaps. It's basically a gap in the price where price opens through the week or a new day. Okay, so there's always a gap in between, right? Because there's a few hours of inactivity in the market, right? So it's pretty normal. It's not anything complicated. Breakaway gap is just like an unclaimed fair value gap. Okay, unclaimed fair value gap below like an order block. You see this order block is reclaimed, and we have the BSR draw TP. That's pretty much it, guys. Thank you so much for coming by, and this is what I want to show you guys. Again, this is another example. See, stop punt. It basically tries to show you that basically like the manipulation here is where you would enter, right? You would induce as many traders, and this is where the real move would happen to go to all the way towards the downside. Okay, so again, thank you so much for coming by. I hope you guys learned something from this, and I want you guys to go and test this in the real markets. See over here. Now this is not a good example, but again, stop punt, pay attention to stop punt, and be aware of stop punt. Okay, people always draw like market maker models and just like expect you to like take the trade, right? Don't be induced by ICT 2022. Over here, for example, this is not really a stop punt. Okay, even when almost no one is watching. Thanks a lot, man. Thanks a lot. So yeah, I was just about to end stream, but thanks a lot, man. Yeah, so this is a strong high. So over here, wait for a stop punt and then make sure you go. Okay, at PD areas, there's always stop punts because price needs as much liquidity as possible. Okay, thank you so much for coming by, guys, and yeah, apply this and backtest this in your real trading, and I hope